Hey everyone, welcome back to the Mark Loeffler Experience. We have another great show here for you today. We're talking condos, primarily Toronto condos, and is it going to collapse? Are we going to see a collapse in Toronto condo market? I mean, we're going to find out. We have Alex Wilson here from Remax Wealth Builders Real Estate, who specialize in, obviously, investment properties, mainly in Toronto, which is a lot of condos, downtown and in some other areas. And yeah, we're just going to connect and we're going to talk, and we're going to give our opinion of what we think is going to happen in the future. And is it going to crash? Are we going to see a huge downturn in that market? I've known Alex for years. He's a real estate investor. It's funny, you had a deal.
It was conditional, yeah.
You had a conditional deal on a property that I eventually bought.
Yep.
And actually, I think your partner Tyler gave me the building condition report.
He did. He did. Yes. We just didn't have the stomach to take that building on. And Mark also does he has a lot of listings in the area that I live, and I came across him the other day, and I called him. I asked him about the building, and he said that was a beast of a building, though.
Oh well, I mean, so that's 26 Ottawa, where Caro is, and literally we bought the property for $950,000, and we spent $1.1 million renovating it. Now it's a beautiful building now, and we have great tenants. We got it reappraised at $3.8 million, so I guess we can't really complain.
No, and that's why you're the king of multi-residential, that kind of thing. I dipped my toes in it one year in Hamilton-wise, and I went back to condos, but it's a very profitable business to be in.
Oh, very, very profitable. Let's talk condos. So we've had a convolution of effects that are affecting the market in Toronto, specifically Toronto, and then outside. So obviously we have COVID, right? So people don't want to live so close together. They're flocking to outlying areas. I mean, heck, Bancroft is having a booming year. Like, they're up 30%, right? So we have that to begin with. So people aren't working downtown.
Yep.
So, renters are, who are young people who are working downtown, living in a condo, typically are moving back in with their parents or doing something different, and they're not renting, right?
Yep.
So we're going to go over like high level stuff, and then we're going to drill down. So if you're wanting just to drill down, you can skip ahead. So we have that. We have Toronto City Council. They passed something with the Airbnb, right? So that's changed the marketplace there. So obviously, the foreign students not coming back. That's obviously played an effect there too.
Oh, for sure, definitely.
What else?
Immigration.
Immigration.
Borders are closed.
You say that, but obviously you haven't watched the video I did on immigration, where it says actually that we're probably going to see very similar numbers in immigration because the borders aren't closed.
Well, the borders are. Your immigration numbers will be down this year. Expecting a rebound next year.
Yeah.
What the issue is? So we'll start on downtown. So typically, when we see a downturn in the market, the last area to be impacted is the downtown core, and the first one to recover is the downtown core. This is not happening this time. It's actually the exact opposite wise, and the reason is that there is no reason for anyone to live downtown right now.
Yeah.
You want office buildings closed.
Yeah. You can't go there if you want to. They'll escort you out with security.
Yeah. So and they're realistically going to be closed till summer 2021. That's when I anticipate them to start opening, talking to friends, colleagues that work in the office market. So proximity to work. That's usually why people live in condos. Okay, that's gone. Two. From a lifestyle perspective, people go to Toronto, they want to go to the great restaurants, they want to go to live sporting events, live concerts. Well, none of that exists, so that's gone. So you can't do live events. You talked about international students. That slowed down to a trickle this year. They did open it up to allow them in, but you're not getting the same numbers wise. People don't want to travel, everything like that.
They also opened it up late, right?
They opened up late, yeah.
If you weren't already in the queue and weren't already like chomping at the bit to get here, you're just like, eh.
Yeah, so they're gone. So that's a huge segment of the market wise. From a supply level, you brought up Airbnb, that was shut down. Now that one there is a little more building specific wise. because there were specific buildings that had concentration of Airbnb units. It wasn't all buildings across Toronto, and a lot of buildings were very diligent in making sure Airbnb wasn't in their buildings. But that is a more, let's call it a neighborhood effect.
So let's just talk about that real quick, because I didn't really follow the news on that because I didn't care because I'm not in Toronto. At the end of the day. So the city council basically passed a law saying that you can't do it, or they made it harder, or
they made it harder. You can do Airbnb, but let's use a more it's your principal residence. I can do Airbnb my principal residence.
Okay.
So if I want to rent out a space in the home that I live in, I can do that, and there's a set amount of days that I can rent that property out per year. I think it's 180. I never promoted the Airbnb investment model to investors buying condos because I knew one day the hammer would come down. Hotels are way too big.
Yeah.
And
well, I mean, there is a short-term rental, like furnished rental market, I should say.
Sure.
Right? And,
for sure.
And that's still going to come back, but you're not getting those business travelers who come into Toronto for 3 to 6 months on a contract.
And that's on Airbnb. That's short-term furnished rentals wise, where you have a separate group of providers. Though you could do that in Airbnb. And specifically, we're talking about the less than 30-day stays. Okay. That's what the Toronto clamped down on. So it's under 30 days. So if I'm renting for 29 days or less. So that's more what it was there.
Okay, so how many units do you think came on the market specifically because of that?
So I'll go building specific wise, because again, there's specific buildings that were targeted. If I look at 12 and 14 York Street, ICE Condos, which openly brought in Airbnb, when COVID hit, the number of rentals that came on the market, you're going from single-digit rentals in the two towers to over 160 units available for rent in the building-wise. So you're looking at specific buildings that had huge shocks to their system, and then you see those units come onto the rental market-wise, and then those increase the supply and have long-term, and they go onto the long-term rental market-wise, which then causes more impacts on the monthly rental amount that you're getting wise. So in regards to how many actually came on, hard to judge that number wise, but if you look neighborly building wise, which buildings that had hotspots for rentals wise, you're seeing a huge increase in those buildings, again, from single digits to triple digits in the amount of rentals available in those buildings.
Yeah, because I know I ran the numbers, and typically around this time you have anywhere from 5,000 to 7,000 rental listings in Toronto, in like old Toronto. And now there's something like 23,000.
Well, what you have, if you look at condo listings, so from a statistics wise, which we just ran at the end of October, at this time this year, active listings for rental downtown would have been around 1,500 units available for rent.
Okay.
Right now, that number is almost 7,000.
Yeah.
So nearly a 400% increase in regards to the amount of rentals. Now, this is where it gets really interesting. From a listing for sale standpoint, the amount of units for sale has also increased over 300%, and we're sitting at nearly 3,000 units for sale. And Mark, this is what's going to happen. Our peak rental time is August. The most rentals get done in August. If we go back to 2019, there were 1,750 units rented downtown in August. Then you go to September, it goes down to 1,100. October 1,000, November 900, December 800. So there's a seasonality to that. Typically, you have people are starting their new jobs, coming back in the city for September 1st, people going to school and everything like that. That peak day is now gone. So we're looking at nearly 7,000 rentals on the market in downtown alone, C1s, C8.
Yeah, and we're not even talking, like we were just talking before, like one of our clients has a rental listing in High Park. And we rented a bunch for them in May, and like a week gone, multiple offers, and now we're actually brought the price down by probably 5 to 6%. We're not even getting showings.
Yeah, and so what's going to happen? So you have is it a unit empty or is it tenanted?
Tenanted till the end of November.
So if you have a tenanted property, it's not going to rent until it's empty. No one wants to go see an actual tenanted property when there's other empty ones in the building. Why would I want to go see someone that someone's living in right now? So
well, that's downtown condos. I mean, this is a little.
Oh yeah, that's different. That's house product.
Yeah, yeah.
So we're just specifically condos wise. If I have 30 units for rent in the building wise, and my unit's got someone in it, but the unit above the same floor plan doesn't, I'm just gonna go see that one.
Yeah. Are you seeing people moving within the building because they can go upstairs and get $500 cheaper a month?
Yes, what we've had, so I own a property management company for condos in downtown Toronto as well, and we'll have our tenants now come back to us going, hey, give me a reduction, or I'm moving a couple floors. So 100% people are leaving to jump units wise. So you do have to work with your tenants, your existing rental rates. When they're not in leases, when they're on the month to month, you're going to have to negotiate with them, and you're going to have to reduce your rent. And you're better off dealing with the let's call it the devil you know than the devil you don't, because once that person leaves, you're going to have some vacancy in the unit wise. And what's going to happen is, so if we're talking about 7,000 units on the rental market, and rental activity is going down just by the typical seasonality, you're going to have people that are moving those units from rent to sale wise, and then that's going to put more supply in the market, and we're already up 300%.
So
downward pressure on pricing.
Right. So again, how many listings are on like for sale right now?
In downtown Toronto, nearly 3,000.
3,000. How many sold last month?
You know, I don't even look at that stat. I just care about how many on the market compared to last year.
Okay, because I'm just wondering, like, I know that I think it was the end of September, there was 5 months worth of inventory.
Yep.
So it's 3,000, there's 600 sold, there's 5 months worth of inventory. Yep. I'm just wondering if that trend has continued through October, or if we're starting to see where, okay, now there's 3,000, but only 450 have sold. So now we're seeing 7 months or 7 months.
Oh, inventory is going up. So what you're gonna see from a typical seasonality for sales wise, October is typically a better month than September in regards to sales wise, and then things taper off. Mm-hmm. We really did well in September wise for sales. October is still trending decently wise. I can say that from a listing standpoint, we sold 4 firm this week wise, 4 condos wise. So things are still moving, mm-hmm. but you're gonna have your drop off in November, and you're gonna, as you're asking, you're gonna see that month worth of inventory continually creep up.
So we're seeing a balanced market right now. Like, you're probably seeing offers go in, they have conditions.
100%, yep.
You know, you have your financing, inspection. Do you do inspections on condos?
I hate when I get an inspection condition.
Yeah, I know.
But here's what it is. Do I take the inspection condition?
Yeah.
I do.
Yeah,
I do.
Yeah.
If I'm dealing with a buyer, I don't put an inspection condition in. There's nothing to inspect in the condo. If I get an offer right now and I have an inspection condition in there, I take it.
Yeah.
Because I have to deal with it wise. And I can tell you, we had one where the inspection came back with a frivolous thing, and I said to the guy, you know what? We just got to accept it. We got to take it, and that's the kind of market that we're in right now.
Yeah, and then obviously, so it's still kind of it's leaning towards the buyer's market, but It's still a balanced market, mm-hmm. and soon it's going to. Do we think there's going to be a race down to the bottom, does everybody still have a lot of equity?
For sure. So if I look at, we've seen the run up on prices, right? Depending on when they bought the product, if they bought it pre-construction a number of years ago, investors have a lot of equity in their properties wise. So the investors that don't want to deal with the hassles right now, they may take a $50,000-$100,000 hit from where they were peak pricing March 1st wise, but they're still up overall. And if they don't want to deal with the hassle anymore, which I'm sure you see in your business too, you know what, Mark, I know I can make more if I wait a little longer, but I don't want to deal with this anymore.
Well, in the multifamily world, we're not. Cap rates are compressed because you can get a CMHC loan at 1.2 to 1.3%. We're getting bank financing 2-year for 2.3, right? Mm-hmm. 5 years at 2.8, it's ridiculous, right? So, cap rates are definitely compressing. So, mm-hmm. I don't know. I'm actually considering selling one of my buildings because of that. All right, so downtown condos. So we have that huge pool of rental condos, mm-hmm. and what point do you think that triggers to flip into a sale?
Well, here's a few things to factor in. So A, the media is number one. So the media is how much they spook the buyers. So
Oh yeah.
the condo is always hot news, and it's hitting the markets where they talked about the smaller condos hurting, the investor-based condos hurting more than the larger.
Under 500
Yeah.
square feet.
Which I own a number of those. So that's hit the media. So anyone reading that may get spooked. So the media is picking it up. Your tenant gives you notice into the winter wise. You call me up, I tell you the rent that you're going to get. You almost fall off your chair because you're getting 30-40% more of that the year following wise. I tell you might be empty for a month or two. At that time you may decide. I've already had people decide, okay, you know what, just put it up on the market right now. And I can tell you this, if there's a tenant in the unit when I put it up for sale, it's not going to sell. And again, same rationale from when I said a tenanted unit that's in a building, it's not going to rent. People don't want to go see a tenanted unit. And I can tell you, from a condo side, the way a tenant keeps the property and the way a property is listed for sale wise when a tenant is not there, it's night and day for the properties.
Well, I mean, and with the landlord tenant board, like that tenant might just say, hey, I'm not going to move.
Yeah, oh, yeah.
And then, we've seen some horror stories with that, right? So, I mean, if I have the choice of offering on your property that's tenanted or the property that, again, same floor plan, one floor up, one floor down, that's for sale, I'm probably going to offer on the other one. And
for sure, yeah, because the big difference between the condo market and the multi-res market is your buyer in the multi-res is an investor and they analyze it with a cap rate. Mm-hmm. That's what they do. Maybe, depending on the location, there's a land value formula in regards to developer looking at that kind of thing. That's how you structure it. A condo, most likely the buyer of a resale property is going to be an end user. So it's an emotional purchase for them wise. So for them to look at, I may have to deal with a tenant, I don't want to do that. This is my home. This is the roof over my head. Maslow's hierarchy of needs: food, shelter, warmth. So if I'm looking at shelter-wise, it's very important with them. That's why it can be lucrative on the upward cycle-wise. But your investor-based product right now, it's got to be empty for you to edge out a decent number on the sale-wise.
Okay. So, I mean, a lot of people who watch my show here, they're investors.
Yep.
Right? And they're probably sitting there, we haven't seen a downturn in quite some time. So are we going to see a downturn? I mean, so let's look at it. September condo prices were up 6% year over year, right?
It's such a misleading statistic.
Is it?
So
okay.
So when we look at that statistic wise, when they talk about prices in the GTA and condos, I can say the condos in the 905 areas are doing better than the condos in Toronto wise, from a rental perspective, from a sales perspective as well. If I specifically talk about downtown condos, which if we talk about the rise in prices and the affordability, have in recent years become an unaffordable item to buy a condo in downtown Toronto. And if I showed the numbers to Mark, Mark would be like, this looks like a horrible rental investment.
I would. I mean, I've looked at them for. I always look at. I keep up to date, yeah. And I'm like, yeah, that doesn't make sense. And I mean, some of it is that I have no rent control. So if rents go up 20% next year, I just raise the rent 20%. Yet, as we're seeing, I mean, to be honest, I've analyzed the numbers right back to when rent control was put on. We've never, year over year, had a decrease in rents.
Yep. Until this year.
Until now.
Yeah.
Right? So it's, what does that start? Like, does then that, okay, then that investor says, oh, I'm 30% less than what I'm getting before, so my $3,000 unit, I'm getting $2,100 now, and yet I still have $200,000 in equity gain that I can realize if I sell it now.
Here's yeah, and that's exactly it. So going to that side, are we going to, so prices up 6%? Well, again, if we go specifically to the downtown core and analyze specific buildings wise, it's not the case. They're actually down. So there are the investors that are, and I've dealt with them. I've already sold them for investors wise that are like, hey, you know what? I'm cashing in the chips. It was a good run. Alex, yes, I know it's not a good time to sell. I know you're saying buy and hold, but you know what? We're okay. We're selling wise. That's starting to happen now. And where you're going to see more pressure and talking about the decreasing rents wise from a cash flow perspective, and depending on the amount of equity these individuals have leveraged out of their properties too. And that's what I teach people, and I'm sure you teach people as well. It's you buy the property, instead of sell it, you reposition, in your market, you reposition the asset, increase rents, take capital out over and over and over again. Same thing in my market as well. Not repositioning tenants, it just rents naturally go up in our market. So they may have leveraged out, and now once the tenant leaves, they're looking at a shortfall of anywhere between $2,000 to $3,000 per month, bleeding money wise, and they're like, hey, you know what? I can only weather this storm for so long. Yeah, I'm up my equity wise. Let's cash out, even though I'm going to lose 100 versus March 1st.
I mean that's a paper loss,
exactly.
Right? You've never really had it.
Nope.
Like you can't eat equity, right?
Yep.
So I mean until you sell.
Yeah, exactly. So what you're going to see when our price is going to go down.
Well, they're already down, is what you're saying.
Yeah, and they're going to go down further. You're going to see softness November, December, January, February wise. That's when we're going to see an additional, let's say, 5% drop, maybe even 10% drop on pricing wise, as these units become empty and people can't put any warm bodies in them. Now, where the opportunity is, downtown Toronto isn't going anywhere. I relate it to New York City, not saying Toronto's New York City, but New York City is still there, and New York City still exists, and they've seen many crises and different things happen. You're going to see downtown Toronto come back in 2022. You're going to see things level off in the spring of next year, maybe start seeing a slight increase into the summer wise, so heading into Q3 in 2021, with a full recovery expected in 2022. So I see it as a short-term opportunity. As you've been looking at the condo market, I haven't seen it go down. You can get it.
I've seen the condo market go down. I've never seen the rental year over year go down, right? Like just rental pricing. So, okay. So other than if I'm a emotional buyer and I'm buying because I have to live somewhere,
Yep.
like I'm moving, I gotta live somewhere, I do want to buy a condo. Investors probably aren't buying condos right now then.
Oh, I have a long list already that are chomping at the bit.
Yeah.
That are ready to buy.
But they're ready to buy now, or they're like, let's wait until December and let's get some easier, like let's shoot it, like let's have a bit like a smaller barrel with more fish in it.
Yeah, they're ready to buy when I tell them.
Okay.
That's ultimately what it is. My typical investor is a busy professional wise, so they don't have time to do all the analysis and everything like that. And every building is different wise. So every building is like a neighborhood. Every building's like its own little city on an island wise.
Well, I mean, how many like 600 units in one or something?
Oh,
like,
exactly.
You got 2,000-3,000 people living there.
And depending on the layouts and views and everything like that. So it's not as simple as just looking at the cap rates of a multiplex and the location wise. There's a lot more analysis that goes into all the variables and everything like that. So they're ready to jump. I found a great opportunity just last week. I'm like, oh, this is an incredible opportunity, which I'll be writing an email and sending it to my investors wise. So it's just looking for those pinpoint specific opportunities and the specific characteristics of a building wise. And we've touched on one thing. What you want to buy in is you want to buy in a building that does not have a rent control tag to it. Because what it is we've talked about rents going down. So I can get you a deal on price wise, but if you have to put not a terrible warm body, but a warm body in there at a terrible rent, you could be stuck at that rent for 10 years.
Yep. And
that doesn't work. What you want to be able to do is capitalize on the increase in rents in the future wise. So I'm focusing on buildings built after November 2018. Those are the ones there which have the most potential wise. Those are the key for investors. And users can focus on any building, but investors wise, you want to be specific in the building because of the cash flow portion of it.
So built after November 2018, obviously there's no rent control. As for right now, that might change in the future. Like again, we've had that before, and they've changed it, and then they've changed it back, and it's a little bit of politicking there.
Yeah, for sure.
All right.
And I'll add one thing. There is rent control across all buildings next year. So none of us can increase rent. So that is something that's a little different. Why? So we don't want to mislead people there a little bit.
Yeah, I mean, if you're putting a tenant right now, anyways, you're
not going to be able to increase rent next year.
Yeah, like you're not. Like it's again, 2022 is when, and this, like I've said this too. I think that in 2022, you know, we have a vaccine. Take it or don't, whatever you guys want to do. You know, herd immunity, whatever happens, like this will be gone, and you know people will forget, right? They'll be like, oh, bars are open again. Yeah, we can go watch the Jays play, the Leafs play, the Raptors. You know, we can go see, you know, Ed Mervish. Is that still a thing?
Yeah.
Ed Mervish Theater, whatever. And go to theater, go to restaurants. They're like, yeah, we want to live that lifestyle, right? And people are gonna, like, again, investors are gonna see this as, okay, this is an opportunity, and I actually called it. I'll link the video that back in May, one of my earliest videos I said, or back in March, one of my earliest videos I said, I think there's a 2 week to 4 week buying opportunity in the residential market right now, or any market.
Oh, April was horrible.
Well, mid-March to mid-April.
Yeah, exactly.
And at the end of April, people are like, I still have my job, I'm healthy, this isn't so bad, let's go buy something.
Oh, yeah.
And yeah, so I mean, we did a bunch of deals in March, and one I actually should have bought myself, but you know, there was a $400,000 lift in 2 months.
Yeah.
It's, you know, and I said it, and I'm like, it feels like '08 when, you know, in Canada we had that crisis, and then everybody woke up and like, because they saw what happened in '08, '09, they saw what happened in the States. So I listed a property the day Lehman Brothers collapsed.
Yep.
And you know, I took probably a $50,000 paper hit on it.
Mm-hmm.
And yet, if I had just held it for 6 months, I would have made 100.
Yeah. Oh yeah.
Because people woke up and said, well, I still got a job.
Mm-hmm.
Well, look, our banks are still financing, they're solvent. And I mean, money is essentially free.
Mm-hmm.
I mean, especially,
that's where
you know, buying, like, if you're a professional and you're making whatever, $150,000, $200,000 a year, you get a financing at 1.6%. Even if you're getting it 2, I mean, that's still free. So, all right, well.
And I want to add one more thing. You know, you talk about that, and we're talking about financing wise, and we've seen you on the residential side, on the housing side. So houses, you've seen that spike, and you've seen that spike in Toronto, Oakville, Mississauga, Burlington. You can go Windsor, everywhere. It's spiked up. And now we have condos in downtown going down. What we're going to experience again is now we're seeing a big gap in regards to the spread between the pricing on condos and on freehold wise. And there's a limit more to what people can afford. And when you get that gap, condos are going to be the only thing that they can afford. And that, again, will be the only place that individuals will be able to afford to live in. And that's where you'll see, again, that natural kind of getting closer to that medium where there's that defined gap between the two. So speaking about where you see, you know, jumps in the market wise, that's where the opportunity is.
Yeah.
You know, we can make our regular, you know, let's say anywhere between 3 to 7% lift per year, you know, or then you have the gaps where you make the big jumps, the big wealth levers, and that's where you see in the news-wise, oh, the rich get richer during the pandemic. Yep. It's because they see the opportunity and they have the ability to jump on the opportunity.
Well, and you know, I think 90% of the people who aren't working now during the pandemic is because they're in hospitality and lower wage jobs and that type of thing, and you know, full-time jobs just didn't get hit as much.
Yeah.
I mean, they're starting to see a little bit of it now that people are like, you know, the wage subsidies are kind of coming off and that type of thing. Yet, anyways, that's not what we're here to talk about. So, all right, so Toronto condo market. So basically, you're telling me the prediction is we're down already. So forget what you're reading out there. We're going behind the curtain here. Down C1, C2, pricing is down, and
C1, C8.
C1, C8.
Yeah.
Okay, I don't even know.
Yeah,
that's east-west.
Downtown Toronto.
Okay, so, and you're seeing that already. Rents are down 30-40%.
Yeah, anywhere between 20 to 40, depending on the building wise.
Depending on the building amenities, all that fun stuff. Yeah. And do you think we're going to see that go lower? Or you think we've hit?
No, we've bottomed out on the rental market.
Well, I mean, we have 7,000 rentals. I mean, if I was renting down there, I'd be like, oh, you're asking 2,000? I'll give you 1,700.
Oh yeah, we get that, and that's where because we do so many rentals downtown, we have the pulse on the situation. Our rentals that are priced correctly for the market go like that.
But you get multiple offers.
Yeah, probably. We leased 7 condos last week wise. So things are priced correctly like that. Same thing on the sales side. Sales things priced correctly. I listed one last week, 0 days in the market, got an offer basically at list price. Done. Conditions. I got to take the conditions still right now. Done. Sold. Firmed up yesterday. Price right. Things will move. Yeah. So there is a bottom to the market wise. So we're near the bottom in regards to what it's going to be. And again,
at least on the rental side. Do you think we have some more downside?
We still have more downside on the sales. Yeah.
As some of these rental people come into the sales, and as they become vacant and that type of thing, as people move around.
And I can say who's buying them. So what you'll have. So we had people move back into their parents' house. Well, there's only so long that people can live in their parents' house for, and they start going nuts.
I could last 20 minutes.
Yeah, so we and I see it on my end. We're having some of those people come back going, hey, prices are good, financing cheap. I'm going to be in the property for 5 years, so they're not looking at a 1-2 year flip wise. Yeah. They're like, okay, this makes sense, and they're coming out of the woodwork. They're taking advantage of the opportunities now. So, and that's where your window will close in regards to the opportunity at one point. I don't know when it's going to be.
And the person who tries to time the bottom,
is going to lose out.
Yeah, I mean, and you'll see the people like when it's the worst, when it's down 5 or 10% in December, January, or whatever, they're going to call for 20% more.
Yeah.
And then the next month you'll see it tick up 1%.
Exactly. Yeah.
Because I mean, what'll happen is like there's a lot of money sitting on the sideline right now, and they're just sitting there waiting to say, okay. Yeah, I'll take 3 units.
Yeah, it is.
I'll take 2 units. Let's do that, and
Well, and I've told people, I'm like, get your money ready, get your financing in order, so that we can jump on the opportunity when I have it. And these are seasoned investors that have already invested in the condo market, so they're like, yeah, I get it. Yeah, let's do it. And normally I tell people, buy long. So I sell a lot of pre-construction wise, a lot of paper wise. Won't get into that too much today wise. But this is a time when I'm telling people to buy short and take advantage of the short opportunity.
Yeah, definitely. Well, I know I was talking to a developer downtown, and land values are still going up, and
construction costs
are going up. So the only thing cheap for them is money.
Yeah. So if people are waiting for a crash in the pre-construction prices, it's not happening. Like Mark's world and multi-res, it's all about the numbers. And if the builder's like, okay, well, I can't make this financial sense to do it, so my land costs are going up, my construction costs are going up, my labor costs are going up, so I need to sell at this price for it to make sense. Okay, can't sell at that price, I'm not building it.
Yeah,
that's just what it is.
I'll just hold on to the land for another 5-10 years and see what happens then.
Yeah. So that's where the buy long opportunity. We still sell pre-construction buy long, but what you want is you want to make sure it's finishing 2025, 2026. And what you avoid on the pre-construction side is the short-term, aches that you're going to deal with if you buy something resale right now in regards to dealing with the tenant, that kind of thing. Not that big of an issue, but people that just want to throw cash at something and see the lift, you want the long side on it.
Yeah, I mean, and that's good for passive investors. If you guys want to be more active investors, I mean, you're
the king of active investors.
I mean, you've seen doing burrs and that type of thing. So, I mean, definitely. But I mean, just a quick recap. I mean, let's look at this. So, rents are down literally 20 to 40%, depending on which building, depending on which area. We're starting to see that go out a little bit in Toronto in general. That's what just anecdotally what I'm seeing. Prices are down already in the downtown core. They're going to fall farther because we're going to get more inventory on the market, and we're just not absorbing enough of the inventory yet. And until that gets to that price reflection point where that rents maybe start to tick up a bit, and that price comes down to say, oh, I can actually buy a cash flowing condo in downtown Toronto where I'm making $50 to $100 a month right now.
Yeah, I can. That's the first time I'm seeing that in years. I can actually do that right now with 20% down. Again, I'm slowly starting to see them in the right buildings. Again, very important to be in the right buildings. In the right buildings, the right floor plans, the right layouts that you want to have the long-term investment in. I'm just starting to see that right now, where we can get really close to that let's say cash flow neutral number.
Yeah.
Cash flow neutral number where it's starting to make sense again.
Yeah. So maybe you buy break even, and then 2 years when it turns around, you're not on rent control, and you can bump that up to $300.
Boom. That's what it is.
Yeah. So I mean, listen, I'm a multi guy. I'm not going to go down and buy a condo because I don't like other people making my decisions about what to do and renovate and how to do and give the lobby guy a raise or whatever. That's just not for me. I like to be in more control. Yet this, I mean, in every crisis is an opportunity. I like to call it a crisis-opportunity. So if that's something you're looking at, like, Alex, how do people get a hold of you?
You can reach out to me, contact at alexjwilson.com. I, like Mark, do a ton of videos.
We will post that down below.
Down below, we'll post a YouTube link down below. You can watch my videos. You can check out my website. We do a lot of work just like Mark does. All about educating the consumer out there. My type of investing is more of a passive form. It's, for me, condos, such concrete boxes in the sky. I don't got to worry about anything.
They're easy.
That's what it is. But I can say the one thing, I got to give a plug to Mark. You'll eventually cap out in regards to how many condos you can have from a residential mortgage perspective. There's a ways around that, but it gets more complicated. Commercial mortgages are beautiful things. Whoa. Beautiful things.
It's so funny, on one of the message boards I'm on, somebody had mentioned that, and I'm just like, hey, start buying 8 to 12 unit properties. And it's so easy, and the more money, and I'll link the commercial mortgages thing that I have, the video I've done.
Oh, you got to watch it. Everyone here has to watch it.
But the more money they give you, the more money they want to lend you. They just want to keep giving you money when you're in the commercial world, and cheaper and less fees.
So what I'll do, what I'll help Mark out here. My strategy. So I did a little multi-res back in the day. I want to get a little more into the multi-res because I have a large condo portfolio now. You take advantage of the dip, and then you leverage money out of this, and then you use that money for the down payment of the multi-res wise, which then gets you into the world of commercial investing. And the commercial investing, and then the unlimited cash opportunity wise.
And then once you own a big enough portfolio, you'll be like, why do I own these dinky little condos in Toronto? Or it's $1 million for 500 square foot, and I bought my multiplex for $1 million in St. Catharines or Hamilton or Oshawa or something. Anyways, we digress. But thanks everybody for watching. If you did like this, please subscribe. Turn on that notification bell so you do get notified anytime we do post a video, which is Monday, Wednesday, Friday, 6:15 p.m. And oh, I forgot. You guys got to smash the like button for the YouTube algorithm. It really does help out the channel. I do appreciate it. We're at about 1,200 subscribers now, so if you're new and you haven't watched before, my name is Mark Loeffler. I do multi-residential investments. I have about 200 doors. I'm a real estate agent, and I help small business owners build their businesses. Anyways, thanks everybody. We'll see you in the next one. Have a great day.